Today, we deep dive in how interest works, uncovering what affects it, and will guide you on how to make the most of it. Let's start off with how interest works. In short, interest is calculated daily but charged monthly. Every day, the bank examines your home loan balance and multiplies it by the interest rate you're on. This amount is then divided by 365 days to determine what your daily interest is. By the end of the month, the bank repeats this process for each day that's passed, and whether the month has 28, 30, or 31 days, the accumulated interest is then summed up and billed as your monthly interest repayment. Let's take a look at how this works. Say you have a home loan of $500,000 with no redraw or offset facilities, and your interest rate is 6.05%. For every day that passes, $82.88 in interest is payable. It means that at the end of a 31-day month, the total interest will be $2,569.18. While changes to your interest rate will change the amount of interest you pay, it's also worth noting that the number of days in a month also plays a big part. Months with more days will naturally lead to higher interest charges, while shorter months will see a dip. How does redraw affect your interest? Whenever you put money into your redraw facility, it'll decrease your home loan balance, and therefore by doing so will in turn reduce the interest you pay on your home loan. Let's revisit the example and see the impact of $50,000 in your redraw over a 30-day month. For the initial 5 days, the funds weren't added to your redraw. During this period, the interest is calculated on the full loan amount of $500,000. However, once the $50,000 is transferred into your redraw facility, that's when things shift. Instantly, the loan balance drops to $450,000, and for the subsequent 25 days of the month, the interest charge is based on the reduced loan balance. Using the redraw over the past 25 days has allowed you to save close to $207 in interest. An offset account works in a similar way. The key difference is instead of moving the money into your home loan account, it stays in your account, and every day the bank checks both your home loan account and offset account and subtracts one from the other. The interest is based on the difference. So imagine you've got $50,000 in your offset account. For the bank, this means that instead of your home loan being a $500,000 balance, it will look at the difference between the two, in this case, $450,000. Then they calculate your month's interest based on the lower amount. Whilst we've kept things very simple in this example, each day the bank will review what's held in your offset account. As this increases and decreases, so too will the interest which is charged. Let's recap on what we've learned so far. Interest is calculated daily, but charged monthly, and it's influenced by three key factors. The first one is the number of days in the month. The second is the interest rate, and the final is a loan balance. So then, how does interest affect my home loan repayment? For interest-only home loans, your monthly repayments is directly tied to the month's interest which is payable. Since the interest is shaped by those three factors we've just explained, your monthly repayments will vary, even if your home loan balance and interest rate stays the same. For a principal and interest repayment, things aren't as simple. This is because whilst your repayment will remain the same, the only thing that changes is the portion which goes toward your principal and the portion which goes to your interest. Going back to our original example and looking at the principal and interest repayments over a 30-year term, you can see that your repayments would be $3,013.84. Let's assume for a minute that over the next 30 years, your interest rate stays the same and you don't make any additional repayments or use any special features like redraw or offset. Throughout this period, while your monthly repayments will stay the same, the split between interest and principal will shift. At first, only about $500 of your monthly repayment will go towards reducing your loan. But as the years go by, this will shift drastically, with less and less going towards your interest and more going towards your principal. Knowing this means that regardless of the amount of money in either your offset or redraw facilities, your principal and interest repayments won't be affected or changed. More importantly, the funds in these facilities will help you save on interest against your home loan, which in turn will help you pay off your home loan much faster. Looking for a great mortgage broker? Here at Hunter Galloway, we can help. We help Australia-wide and don't charge a fee for our service. Reach out and call us on 1300 088 065 or visit us online at huntergalloway.com.au.